Everyone, welcome to this webinar brought to you by Bursa Malaysia and managed by LifeChamp. My name is Michelle and I will be the moderator for today's session. Our topic tonight is practical know-how for smarter warrants trading. When you open your trading platform, you may see many different warrants. Some are very active with high trading volume, while others hardly move. You might start to wonder, am I too late or am I choosing the wrong one? The truth is, warrants are not the same as stocks. They have expiration dates, leverage, and their price move based on specific market conditions. The good news is that with the right knowledge, you can learn how to identify potential opportunities, understand how warrants move, and manage your risk more effectively. So today we are honored to have Miss Vanessa Tong to share her insights and step-by-step guidance for trading warrants like a professional. And before we proceed, allow me to make a short disclaimer. Please be reminded that everything that is shared in this session is mainly for educational purposes, and by no way we are providing you advice to buy or sell any securities. You are 100% liable if you make any investment decision. And now, let me introduce our guest speaker today, Miss Vanessa Tong. Ms. Vanessa Tong is a warrant specialist from RHB Investment Bank with strong expertise in equity derivatives and wealth management. She frequently conducts seminars and webinars nationwide to educate clients on structured warrants. She previously spent 7 years in wealth management, specializing in structured products and managing diverse client portfolios. Ms. Vanessa holds a Capital Market Services Representative License (CMSRL) from Securities Commission Malaysia and a bachelor's degree in economics from University of Malaya. With that being said, let us warmly welcome Ms. Vanessa Tong to the floor. Hi, Ms. Vanessa. How are you today?
Hi, Michelle. Good evening, everyone. I want to wish everyone a post Happy Chinese New Year and also Ramadan Mubarak to all my Muslim friends. Yeah, I'm doing well. Thank you, Michelle. Thank you, Bursa Malaysia, for inviting me to deliver some of the sharing session. So I shall start now, right, Michelle?
Yes.
Okay.
Yes.
All right. All right. So today, I would say it's not a very it's actually more I'm actually hoping for a more interactive, more interactive session so that I might actually allocate more time for Q&A. Okay, if that's cool for y'all, you can just put one in the chat box. I normally don't do this, but I want to try to be more interactive, right? Okay. Yeah. So some of the learning outcomes, which means that what am I going to share with you today? I'm pretty sure that a lot of you join today's session is that you already have a basic understanding on warrants, structured warrants or company warrants. So there's actually a few few things that maybe we want to look into it. So first is like what.
Miss. Oh yeah, can see the slide already. Just now cannot see the slide.
Yeah, just now I was like trying to display. Okay, so why are they powerful? So second is to identify and select suitable warrants. So you thought that sometimes you think that, okay, if I'm making money from CA, like for example, 99 speed mark like CT, okay, you actually have made money from it. But is it going to be the best 99 speed mark warrants from the beginning till the end? Yes or no. So we are going to look at that. Third will be how to use live matrix, because live matrix it's very easy. Like once you look at it, it's like what is happening in that warrant. But how do you actually use it more effectively? Like at one glance, you know which is the better warrant for you. Then risk management techniques like to take note on all the red flags. And last but not least is some of the strategies when we actually use structured warrants. Okay, so yeah, so these are actually Maybank and Maybank warrants in the market. So that's one thing I want to mention here. So I will not be putting a lot of points in my slide because I want to share more as I go. So for example, Maybank, you actually notice there's so many call warrants on Maybank. So how do actually issuer choose what kind of warrants to issue? Very easy. There's actually three main points that you need to remember. First, it has to be above 500 million ringgit of market cap. Second, it has to be listed on main market. So there are definitely counters listed on ACE market, but then they are actually not yet eligible to be, for us to issue warrants. For example, if we are looking at copy, for example, it's above 500 million ringgit of market cap, right? But since it's still in the ACE market, so we are unable to issue warrants like that. Yeah, so we are still waiting if there's any transfer of such ACE market counters, then we can actually propose to issue a new call warrants on it. Yeah, so the third one would be liquidity. So we have to look at this specific counter, this specific underlying, are there any liquidity on it? Yeah, so if the liquidity is good, that our desk, like for example, our trading desk able to hedge on the position, then we will be very happy to issue all these call warrants or put warrants. Yes. All right. So this is the Maybank. I think everyone still remember lah. So this was on 26th February. I purposely took this screenshot to show you. So if you notice that Maybank it was traded around like 12 ringgit, and then it actually dropped to 12 ringgit, 12 ringgit and 2 cents, and then it went down to 12 ringgit and also below 11.50 cents. Yeah, it's around like 11 and 40 cents on that day. So you actually notice that warrants, like call warrants, it will actually follow the direction of the mother share. So mother share goes up, it will go up, but when it comes down, it will follow the same direction. And the percentage, which means the movement of all these call warrants and put warrants, right, will be much higher than the mother share itself. Right? So if you look at this, normally I will use my own our own trading platform. So this is actually the price movement of Maybank. So imagine if now you have a right view, you have a correct view on Maybank shares, the movement up and down. But then since it's actually a blue chip stocks, and then the movement will be, even though it's a few cents, I mean, there will be a few cents or maybe a 10 cents or 20 cents, right? You don't actually notice a big difference in terms of percentage because it's expensive, right? It's like 11 ringgit. But for warrants, if you look at this summary of this stock price tracker, you will be able to see the price actually ranges from, it ranged from 14 and a half cents to 24 cents. Yeah, so imagine in May, just for Maybank, right, you'll be able to capture all this price movement through a warrant. Yeah, so it's not like company warrant. Even though I have worked with a lot of very experienced brokers, traders in the market, sometimes they will actually mistakenly took company warrants and structured warrant. Okay, but they are the same in terms of they are also both warrant. They are both having one underlying, but then it actually derive a price or value from the underlying. Okay, but the main difference would be the issuers. So for structured warrants, there will be issuers like Macquarie, Kenanga, Maybank. But company warrant, it's actually issued by the company itself. So if you're holding any of the mother share, right, then they will just say, oh, okay, thank you for supporting. Then I'll give you warrants, company warrants. Yeah. So when you have an issuer, market maker, that's why I put a star here. Market maker is playing a very important role in market making all structured warrants. And that is the point when we actually look at live price metrics. Yeah, so that is what we are going to discuss later. But for company warrant, there's no market maker. So the retail investors themselves are the market maker because they sell and they buy the warrants at some specific price, like supply and demand, and then they will actually drive the price of the warrant. Sometimes you will see there's no, I would say there's no, sometimes it's very rare, but you will see very little movement in the mother share, but then the warrants moving a lot more than the mother share. Yeah, but for structured warrant also, it will actually look the same as well. You will see, there's only like maybe 1 million units traded in mother share, but then in warrants there's so many more units traded. Yeah, so maturity warrants are shorter. Settlement method, call warrants, all these structured warrants is actually generally in cash. Yeah, so the cash settlement method, it actually depends on the moneyness of warrants. All right. And then last is the stock code lah. We know C and H or CW or PW for index warrants. Then those are the stock codes for structured warrants. But for company warrants, they are usually start with W. Okay. Yep. If you have any question, you have to put it in the chat box or in the Q&A section as we go along. If not, after I finish everything and you forgot what to ask, okay? So this is the past performance of Suncon C52. So why I actually take this, right, is that I want to show you the magnified performance on this underlying called Sunway Construction hub. Okay, so Suncon gained 12%, 12.38%. During this is actually in February. Okay, February. But then for Warrant, it actually went up by 88%. So if you do a very simple calculation, it actually went up for a few folds. Yeah, so 88 divided by 12. Yeah, about like 6-7 folds. Okay, 6-7 times. Right, so this is what we call an effective gearing. I'm going to share with you later what that means. And the powerful, I mean, it's really powerful. So if you think that, oh, if I actually purchase Suncon mother share, I will make 12%. But if I actually diversify a bit into warrant, then I might actually have a bigger gain than purely shares, right? This another one is 99 speed mark, but this one I actually took a range of longer time. It was a 6 months tenure from June to December. Okay, so June to December, we actually saw a gain in 99 speed mark for 65%. I would say consumer sector was actually doing quite well about last year, third and also fourth quarter. And the warrant actually moved by 460%. So it's really good. Okay, however, it's not always that great, right? Because we noticed that Nadia's speed mark price also actually came down. So it's very important for us to know when to cut loss. And this will be under our risk management strategies. Yeah, so for Maybank, this is the terms and mechanics. So I use Maybank as a very good as an example. It's not a very good example, but it's a very simple example. Okay, now we need to learn exercise price, ratio, expiry, effective gearing, sensitivity, and so forth, all these languages. Because sometimes it's very hard for us to understand. Now you know how to trade, you know that call warrant and put warrant is going to track the price of underlying. But then you don't know what does all these things mean, like, oh, what's sensitivity? Okay, I'm pretty sure you know what is sensitivity, but why do I have to look at exercise price? Yeah. So now we have to know what are the fixed terms for all warrants. So for us issuer, when we have decided to issue a warrant over Maybank, so we got this name Maybank C2F for this warrant, we have to fix a few things. First, we have to fix what is the exercise price of this warrant. Then we have to set the exercise ratio and the expiry date. But of course, last but not, I mean, the most importantly is that we have to set the underlying first. And these three things is, and also the selling volatility. So all these four things, right, is going to drive. We are going to, like, adjust it a bit, and it's going to generate something called the warrant value, the warrant price. If I want it to be more out, because normally when we actually put a price of these warrants, it would be about 2 weeks before issuance. So definitely we have to input some of our views on this stock. So whether we want to make it, like for example, today Maybank is 11 ringgit. Do I want to make this warrant in the money or out the money 2 weeks later? Yeah, so this is how we set on the exercise price. If you notice that warrants, those are more in the money, which means that the share price, the exercise price is lower than the share price that time, it will be relatively more expensive in terms of absolute value. Okay, but then how to make it more tradable to investors? We actually use exercise ratio. So if the exercise ratio is high, right, it's like a cake, then we cut into 8 pieces. So it's like 10 ringgit, it's 8 ringgit thing, right? Then we slice into 8 pieces, it will become 1 ringgit each. Am I right? But if I want it to be, this is like when I want it to be cheaper. So when you look at, if you do a screening, then you will see some warrants are so cheap, but why are they not sensitive? It's because it has been split. It has been split into so many small pieces, right? It's so cheap, but then it's not going to track the underlying more, especially when Maybank is like 11 ringgit, right? We will actually need a higher ratio to split them into more smaller pieces. Imagine if I issue a warrant of 50 cents, right? There will not be anyone buying it or investing in it. Okay, so there's another note that to be taken. And the expiry date, normally for stock warrants, we saw in the market generally still setting around 6 to 9 months of expiry. But if you are trading on index warrants, you will actually notice the expiry can be as short as 3 months only. Yeah, so it's very important for you to know when you invest in it, how many days left. So please do not have those type of thoughts that I'm going to buy it because it's like super sensitive, and then the gearing is super good, but then you forgot that it's going to expire soon. Yeah, so this is what we're going to say when it's expiring very soon, then the time decay will be very fast. Yeah. So sorry, I have to put in a lot of things that's outside of this slide because I thought of it, right? I mean, it's planned because this will actually help you to understand how we price a warrant for. And another one that I actually mentioned on the volatility. So normally we use implied volatility over here for you to see. But before that, we actually will set this thing called the selling volatility to see whether how much we have to price this warrant at. Yeah, so implied volatility, if you are already a trader or an experienced warrant investor, you will be able to compare implied volatility. Yeah, so if you know how to compare the implied volatility, then you will be able to know whether this warrant is expensive or cheap. Yeah, so this is how we look at it. And those are the rest of it, like effective gearing and sensitivity. Of course, we'll be talking about it all the time, implied vol as well. But effective gearing and sensitivity, it's not fixed. So it's more like a variable. It will follow the remaining time to trade and also the share price. Okay, if you are not trading shares, right? If you are trading on, for example, Hang Seng Index warrants, then it will actually fall. Sometimes you will see it's so not sensitive. Sometimes you see it's very sensitive because the futures, I mean, the underlying price it keeps moving up and down, up and down. It could be go up above the exercise price, came in the money for core warrants, but or below, then it will be out of the money, and then it will be less sensitive. Yeah, so this is how we actually look at it. Okay, if you have any question on some of the terms, you can actually put it in the Q&A box. Yeah. Yep. So plan your trade well. So just now I actually showed you how Suncorn actually make money for warrant investors. Some people, they buy it and then they hold it for 2 weeks and then they make maybe 80%. But some investors, some traders, they will actually do some intraday trading. Okay, intraday trading or maybe a few days swing trade. Then it's very important for you to know how to read what is sensitivity. So sensitivity is basically this color code that change. Yeah, color code that change. You see this one is like from 14.5 and became 15 cents. 15 cents became 15.5. Okay, so now I'm going to show you how I actually look at sensitivity. I will go to you can go to any issuer website, but I will just use RHB Warrant website. I go to the Warrant metrics over here. So you search on Google RHB Warrant website, and then you can just use and then go to toolbox and click on warrant metrics. You'll be able to compare all the warrants issued by RHB Investment Bank. Where it be the same underlying like Tenaga, or you want to have different like Gamuda, MSC, and Sunway to compare also can. Okay, so this should be on your trading screen most of the time. So Tenaga, C3K, C3Q, and the latest one will be C3V. So at one glance, first thing you need to know that whether you are a short-term trader or you're a medium-term trader or long-term is normally not so applicable lah, right here. Okay, so you have to notice that that's the first thing. So if you are a short-term trader, you want it to move faster, you should go for something with lesser ticks like this one, 1, 2, 3, then it will change already. So we use this, and then we see all these 3 ticks, and then this is 4 ticks, and then this is like 6 ticks. So it will move actually slower. Okay, So this is how, if for sensitivity, I will definitely choose this. But in reality, I won't choose Tenaga C3K. Why? If you look at this warrant matrix, why you won't choose Tenaga C3K? You can put in the chat box, then later I'll go and see your answer. But which one will you choose? If you are bullish on Tenaga, are you going to choose C3K, C3Q, or C3B? You can put it in the chat box, then I'll see how do you think about Tenaga call warrants here. Okay, let me see. Ding, ding, ding. Okay, yes, we have some correct answer. Okay, yeah. Why we won't choose C3K is that first, it has a spread. The bid and ask spread, you see, it's not tight at all. Imagine if you're buying at 10.5 cents, right? You can only sell back to the issuer at 7.5 cents. You rugies for like what, 3 cents already. Yes, so Dylan, you're right. Yeah. So as long as you see this big spread, you don't buy. So you look for small spread. Normally, small tight spread, right, is only one tick or half a cent different. Yes. And also, it's near to expiry. That's correct, Tong. Like Tong, same surname, same surname. Okay, because it's going to expire this month end. And that is also one of the reason why the spread is widened. Because like for us as issuer, I mean slash market maker, right? We will actually widen the spread to let our investors know that, oh, this is actually not tradable anymore. If you want to trade, it's going to be expiring very soon. So in this case, we actually widen the spread. I'm not sure if you're in the market, maybe some of the market makers they will do it. But for RHB, we adjust on the spread when it's very close expiry. We want to stop you from buying. And second is that when it's out of stock or low on inventory. Okay, so Rui Yi actually choose. So I asked just a question, which one would you choose? So Rui Yi actually look at the Naga C3Q. Okay, only Rui Yi wants to invest, right? It's only one answer. Okay, so C3Q is actually quite a good warrant if you look at it, because the first thing we need to look is that what is the share price of Tenaga now. Okay, so which one is closer? And also, if you want it to be faster, then you will definitely choose this one for ticks and then tight spread. As easy as that. Okay, but more I'm going to share with you more, because I'm going to share with you all of my learning outcomes in the next few sections already. Yeah, but this is how we actually look at sensitivity. Okay, cool. Let me go back to my PowerPoint. All right. Yeah. Okay, now we are going to something that is more hands-on. It's about the choosing criteria of warrants. If you remember on my opening, right, I actually shared with you that warrants, if you have won money from one warrant, right, it doesn't mean that the warrant is the best throughout these 6 months. It could be not very good anymore. That is why we need to know what are all these terms about. So criteria normally for me, as a person who actually look at the warrants market almost every day because I have to work, right? Yeah. So exercise price, or we call it the money, it actually affects the moneyness of the warrant. It's very important. So you have to understand what is in the money, at the money, and out of the money. Normally, when we look at warrants, right, we actually prefer something that is slightly out of the money or at the money. That is when I would say the profit margin is relatively higher than in the money warrants. Okay, if you got that, you have to write down. Okay, but in the money warrants, right, it's actually more sensitive. So you have to choose that. Out of the money is like less sensitive, but then in the money is more sensitive. Yeah. So this is what we call moneyness. And why I say exercise price moneyness in the bracket is because exercise price is going to affect the moneyness of this warrant. So exercise price is fixed, right? As I shared with you previously. That one that we cannot change at all. So moneyness will be determined by the exercise price, and then it will be influenced by the share price or the index futures price at that moment. Okay, so bear in mind on the first thing, moneyness. Secondly will be sensitivity. So less ticks move faster. More ticks, if you see more ticks are like 7 ticks, 8 ticks, 9 ticks, then it's very slow. Okay. And expiry, if it's less than 1 month, right, the time decay will be super fast, accelerates within a month. It's not that within 2 months it will not be very fast. For time decay, besides from expiry, if it's like, for example, less than 1 month of expiry, right, and the warrants is in the money compared to less than 1 month, but then the warrant is out of the money, you will actually notice in the money warrants it will decay slightly slower than out of the money warrants. Yeah, so but I will share with you why people still like to invest less than 1 month of expiry bullion warrants. Yep. So today I'm going to share with you like how do I actually look at it and how do I use or apply all these criteria in choosing warrants. So MSC, Malaysian Smelting Corporation Berhad. Okay, so this is a snapshot from the trading platform. 2.7 million traded in the mother share, and then we actually saw a few warrants highly traded. So the top traded was MSCCX. Okay, but if I look at this, right, why am I buying this MSCCX? It's like 12 cents and a half. This one don't have, but of course I'll buy and sell. It's like 5.5 cents. This is 12 cents and 12 and a half. And then CV is like 24 cents and 5 cents. So from here, right, that's one thing that you can actually tell is that normally above 20 cents, above like 20 cents or 10 cents, they are normally in the money warrants because they already have intrinsic value. Those slightly below, but it is not guaranteed. This is like, or maybe like the first glance, then you look at it, then you feel, oh, this one should be in the money, and then these two should be at the money or out of the money. So now you don't know because you're trading, right? You don't know like how to compare. So you have to go to RHB Warrant website or some other issuers website that's up to you. So now you're back on our website. So this website, right, is actually designed for all our investors. Regardless you use Maybank to trade or you use CGS to trade, as long as you want to look at warrant, you want to get about all these warrants, then you can use this website. You don't have to log in at all. You can just go in and explore on your own. So in this case, I will go to warrant search. Okay, warrant search, toolbox warrant search. So just now I was looking at MSC, right? Then I put all issuers instead of just RHB because you want to compare. So you put all issuers, then you'll be able to see all these MSC warrants in the market already. So now it depends on you whether you want it to be super sensitive or less sensitive, or you want it to be okay lah. If you look at it, right, how would I do it is that the first thing I will sort according to exercise price. If I sort according to exercise price, I'll be able to see what is the current share price compared to exercise price. So when exercise price is higher than the share price, this is out the money. While this one is 1.65 cents and the share price is already near to 2 ringgit. Yeah, so we know that this CV is actually in the money. When it's super in the money, right? This is when we look at it, we know that the bid price is the slightly expensive one, 24.5 cents. Okay, but for very, very deep in the money warrant, you will see the sensitivity is very sensitive, which means 1 ticks, 2 ticks. Move very fast. But move fast, your gearing will be lesser because it's 24.5 from 24.5 it became 25 cents is in terms of percentage is lesser, right? So then you left with a few. You don't want to buy this because it's so expensive already. So you want 1, 2, 3. So now it's up to you already. You want it to be more sensitive or less sensitive, right? And then if you are someone who actually looks at expiry date, three of them are all expired very, very later in this year. So for me, normally I would choose slightly out the money or at the money. So CW or CY. But there's one thing you have to know is that besides from this issue by RHB, there's another thing that you have to notice is that whether there's any price metrics for you to refer. If there is, you have to go to the issuer website to check on price metrics. And then you see that time whether the share price is near to flipping point or not. So if I look at MSCCX, because I can actually look at the price metrics, if that time the mother share MSC was trading around 2 ringgit, right? Then I know that after one tick, this warrant will flip from 12 cents to 12.5 cents. And for me to make money, I just need to wait until 2 ringgit and 3 cents, and I will make money from 12.5 because I'll be buying at offer, and then I can sell it at 13 cents. So you actually make half a cent in just three steps in the mother share. Yeah. So, and there's another thing I want to add on is that since today is slightly more, according to the organizer, it's called Warrants 201 because we don't want to be 101, right? The warrant sensitivity level will not fix, like this 2.9 ticks, right? So sometimes it's 2 ticks, sometimes it's 3 ticks. So very important for you to use the price metrics to check. So the criteria, let me just go back to the warrant search function. So the one thing that I want to show is that how I look at it. Okay, I just choose 99 speed up because RHB got 3 to compare. I will first look at the exercise price. So I sort according, then this is slightly out, this is out of the money, right? So now, if you compare all these three, the out of the money one will be the cheapest in this case, because it's out of the money, there's no intrinsic value. This one is in the money, it's C15, so it's 30 cents, it's expensive already. Yeah, but the next thing you want to see is that, in the money, out of the money. The next thing is one look at sensitivity. For me, I honestly speaking, 6 ticks is actually quite thick for me to invest. So 2.5 ticks would be quite okay. And if you look at exercise price, it's actually closer. Sensitivity is okay. And then the expiry date is not within a month. I would say we still have about 2 months to trade. This will be suitable for intraday or few days swing trade. If you trade intraday, the expiry time decay will not be affecting you because time decay we count by days. So if you trade within a day, right, just within 1 day, then you won't be affected by time decay. But if you want to hold for like days lah, want to wait for the thing to break out, want to wait for the share to break out, and then you actually have to be very careful because the time decay will kick in. So in this case, I would say 99 speed mark C23 is a relatively better choice compared to C27 if you are a short-term trader. So click onto it, and then you're able to see 2-3 ticks, and then you'll be making about 5% already. Yeah. So this is how I look at it. And this is some of the choosing criteria. There's no textbook answer, but I'm just sharing with you on some of the criteria that you can actually use, apply it on your trading pattern. Yeah. Okay. Got question, you put in the chat box, please. If not, I'll be very jong. Oh, this one I already covered how to use the live price metrics effectively. Yes, but just now I actually mentioned on how I look at it when it's very close to the flipping point. And the first thing that it has to be in your mind, the core of all this warrant trading is that you need to have a target price to exit. Is this warrant going to make money for you? It depends on how you actually look at the mother share movement. If you think that the mother share, like for example, some of the shares, it actually moves kind of sideways pattern. So it actually moves like 2-3 ticks, 2-3 cents, and then it will come back down, or 4-5 ticks, and then will come back down. So there's always a range there. If you already understand on the pattern of this type of mother share, it's not advisable that you look for warrants that has a very thick matrix, like the sensitivity of like Suncon C58, 5 ticks. This example, yeah. So in this case, your warrant will never make money because you look at it, you look at your screen, the bid price or the ask price for warrants is always the same. But if you have a very bullish momentum, for example, hibiscus on last week, you know that I mean, your view is that you want to long hibiscus and it's going to move more than 10 cents or maybe more than 20 cents, that is your target price. And in that case, you can actually look for something that is not so sensitive, like 5 ticks, 6 ticks, but then it has a better effective gearing. And then that will actually bring you more gains compared to those that is sensitive, but then it's not so, you know, the price is higher lah, so then the percentage is less lah. So in this case, I compare Suncon C52 and Suncon C58. I compare both by RHB because it's both hours. In this case, at one glance, I will just look at it. I know that I actually want to trade Suncon C52 because I'm a short-term trader. Yeah, that's one thing. The sensitivity is about the same, but this is 4 ticks and that is 5 ticks. Sometimes it matters, sometimes it does not. But what actually concerns me is that the price of this warrant. One is 14.5 cents, another is 19.5 cents. So imagine Suncon is going to move in about the same manner, 4 cents, right? I mean, Suncon will only move in one way, like 4 cents up. And then one will actually, both will make you money. You actually make one bit, which is half cents from both trade. But then Suncon C52, you actually take out lesser capital because it's 14.5 cents only, ma. If you look at this box. But this one is 9.5 cents. So yeah, you can do that actually. And I actually noticed from our chat box, Tiffany actually asked questions, takes changes from time to time. Yes, that's correct. So if you still remember what I shared, right? Moneyness actually affects in the money, out the moneyness are in the money, out the money, and out of the money. It will actually affect the sensitivity of the warrants. So for example, Suncon, well, today it fly from 6 ringgit and 82 cents, wow, go up until 7 ringgit and 50 cents. So the exercise price is 6 ringgit and 50 cents, so it actually got deeper and deeper in the money. In this case, the sensitivity will improve. When it's improved, means that it's more sensitive. So you will see the tick size the ticks will be lesser, maybe 2 ticks or 3 ticks or maybe 1 tick even. Yeah, so it will change from time to time following the movement of underlying. But on the case of another one, if you compare to, okay, this is still in the money because exercise price is 5 ringgit and 90 cents, but then it's still in the money. I show you another example of out of the money warrants. Like I think just now I saw this one, like this one. Like the Naga C3V is slightly out of the money because the share price is not even at 14 ringgit and 88 cents yet. This is in the money and this is deep in the money. So you see the, okay, provided everything is the same, ratio is the same, but this one is a bit off lah. So you will actually notice that when it's out of the money, then the ticks will be more, but then this will be lesser, and all this in the money one will be even lesser ticks. Provided that the excess ratio, everything is the same, then you can compare apple to apple. Like I think recently I gotten some of the feedback on some YTL warrants because YTL corporation price moved quite fast. It moved down, okay, compared to the exercise price. So this YTL power. So it actually, we call it maybe it was like slightly in the money, and then it actually went down. So it went down from 3 ringgit and 20 cents and go down. So currently maybe it moves around like 2 ringgit and 70 cents. This is out the money. So if it's out the money, you will notice one thing, it's cheap, relatively cheaper. And the second thing is that it's like super thick metrics. There's many ticks. But imagine if YTL power went back up to 3 ringgit and 50 cents, then you won't actually see this at 8 ticks anymore. It will become maybe 4 ticks, 5 ticks. So it depends on the remaining time to trade and also the mother share price as well. If you look at this YTL C2D, even though the expiry is like April 27, but there's no more bid price. You see, no more price. It's 0 ringgit already. That is why. Why? Because the YTL is like 1 ringgit plus any but then the exercise price is 3 ringgit. So it's like super out of money. So this is not tradable. The only tradable will be YTL C2K. I mean, for now from this screen. Yeah, so I hope I answered your question, Tiffany. Okay, so let me continue. Wait, my slide always forgot. Okay. So risk management in warrants trading. This is also very easy to identify red flags. Just now you all did very well. You managed to notice the widened spread. Sometimes when you trade, right, you actually will notice the widened spread also, like how you queue at 8 cents, or you're waiting for share price to move to 8 cents, to 8 cents lah, according to metrics. But mana tahu 8 cents why it's not matched, and that is why you notice, or then you go to metrics and say, yeah, the spread has been widened. So sometimes when the volatility is very high in one underlying, the spread will be widened as well. Okay, so yeah, so some of the red flags. First, if you notice very thick sensitivity like 9 ticks, 10 ticks, then you be very careful in trading. In this case, if you are buying from the market at 2.5 cents, right, you have to wait very long for you to make money, because you're going to make money at 3 cents. So you have to wait long, from maybe you actually entered at 2 ringgit and 3 cents, and then wait till it's over the metrics already. It could be about 2 ringgit and 50 cents, or maybe 2 ringgit and 20 cents for you to make one bid. But this is actually a very good warrant for those who's like super bullish. And then look at the expiry date, it's very long. So if you are bullish, you have some time, you want to do a swing trade, the longer one, then you can actually do this. Like 2.5 cents is cheap, but then once Solar Vest went up higher than 2 ringgit and 22 cents, for example, you can actually make quite a good gain from this. Yeah, so expiry date is very important in this case, because you want to hold and you have a bullish momentum on this underlying. Okay, another one will be EGCG. This is another red flag you have to see is the widened spread. I think just now we actually saw it in Tenaga as well. It looks very tradable. Like if I want to do it intraday, even though expiry is like within a month, but intraday is fine, right? 2 tick sensitivity. I look at the absolute price is 3 cents, 3.5 cents. But if you look at the ask price, wow, this one is 6 cents and 2.5 cents. It's a big difference. Unless you'll be able to get, you actually can queue at if you want to buy, you want to queue at like 5 cents. Maybe there will be someone who's actually selling to you at 5 cents. Yeah, so it actually maybe it's from some other investors who were holding the EGCG warrant. They want to sell it to you. They want to sell it to you because it's like higher than market maker price, then you'll be able to get it. Yeah, but since you only have very little time to trade, then it's not advisable unless EG shares is very active on that day. Third, low inventory. Don't have to say anymore. This one is like no need to say anything. If you look at low inventory, but it's going to show you through the spread, the wider spread as well lah. So what is low inventory? I also gotten this question very often from even experienced traders, and not traders lah, like customers lah, who has been in the market for a very long time. Okay, low inventory means that, so whenever we issue warrants, we have a fixed amount of warrants, like 35 million units from RHB Investment Bank. So EGCG, I'm going to issue 35 million units only. So I'll be selling in the market. So maybe A, B, C, D, or all these investors, they buy. After they bought it, they don't want to sell it. They just keep. Very possible that they are very bullish on this counter. So they buy and then they keep until one day, my inventory from 35 million, I sold out already. My inventory, 33 million is already at someone else's hand. So I cannot, it's actually not very effective for us to market make anymore, because we cannot sell the remaining money. We have to keep some inventory. In this case, we will also widen the spread of the warrant. Like this case in Cetrix, sold out, then we widen the spread, so that if you want to buy, you buy, okay lah, you buy 5 cents, but if you want to sell, it's very hard for you to sell. Yeah, so this is what we call low inventory. However, this is reversible. Once people selling back their warrants, and then us market maker buying back all these warrants, so we have more and more in our storeroom, then we will actually tighten the spread, and then we will it's actually good for everyone to buy again. Okay, so I will remove the low inventory sticker also lah. Yep, this actually can show that investors are keeping it. Either they are very very bullish, or they just unable to sell sometimes. Yeah, but they will just keep it for some time, waiting for the share price to break out, and then they sell it. Yeah, so you have to use the Warrant website to see this low inventory alert. Yep. So I wanted to talk very short one. Okay. Anyhow, steps in choosing warrant. So first, identify underlying. In this case, I would suggest all of you, definitely you have a few underlyings that's your favorite. You identify underlying through different ways: technical strategy, okay, technical analysis, fundamental, which means that you actually follow closely on the research reports and also the target price given by the research house. Yeah, so you have an aligned view in terms of fundamental, you have an aligned view with an analyst, you think that this TP is achievable in about 2-3 months. So you actually have a TP, you have your underlying, identify them. The next one is to identify warrant. Okay, how do we actually use this is that if you use the underlying, right? Example, Tenaga is 14 ringgit, so expensive. Say, I'm not going to use all of my 100,000 to buy just one Tenaga, just because I buy his idea. In this case, you have to go to look for warrants, which is cheaper because you buy his idea, right? So you are also bullish on it. So you look for a call warrant, and then you find a warrant that's suitable to you, for you, which is applicable to your trade, on your trade. And then you understand all terms. You know what is exercise price, exercise ratio. You know what is expiry date. You know what is implied volatility. And you know how to use the next one, the warrant metrics. This is to plan your entry and exit. You do not want to invest in a warrant that is very not sensitive, because through the price metrics you'll be able to see, and then you can actually plan your exit where you have a TP, right? So normally you won't wait until TP lah. Sometimes TP is like 6 months later. So maybe you want to give a bit of discount on the TP, then you can actually plan your exit at that price. In this case, you will actually have to insert some of the strategy and planning in your mind that you want to hold it for 2-3 days or maybe a week at most. So it depends on the expiry date and also the share price movement. Okay, so use the Warrant metrics to make your planning. And last but not least, from the Warrant metrics, you'll be able to see the red flags before trading. There's another that is not shown on the price metric, is that when you trade in the market, right? I think I put it somewhere. This one. When you trade in the market, it's very important for you to go and click onto it and look at the liquidity, which is the bid and ask quantity that is queued by, that is there lah by the market maker. So even though JPG right, no people trade one. You see this volume 6 million, this one 700 leh, got people trade, but this one got like 0 people trade. But then say, but if you click onto it, you see, hey, got 500,000, 500,000. Okay, which means that the market maker still market making. But there's another thing you want to notice is that, hey, why is the buy and sell is like so wide apart, 3 cents and 5 cents? This is another way for you to identify the red flags. But then I go back to this liquidity. So 500,000 each side is actually good for investors. We call it liquid, because for you, if you want to buy, you can just buy 500,000, and then it comes the next thing called the refill speed. So after I finish selling this 500,000, it depends whether like 5 seconds later or 10 seconds later, another 500,000 units of warrants will be refilled. So imagine you have 1 million units of warrant you want to buy. So you buy 500,000 units match. And then you want to buy another 500,000, but you are waiting. Yeah, maybe you have been waiting for a few seconds. But within these few seconds, JPG shares move. It moved away from the price metrics. That would actually cause that your another 500,000 not matched. Yeah, so this is sometimes it happens when the liquidity, the refill speed is relatively slower because it can be adjusted. It depends on the mother share liquidity as well. So if you are already in a queue, but then maybe in front that's before you that's 5 million units to be match until your turn, but then the share price drop. Yeah, so that will actually cause your warrants not matched, and then if you still want to sell it or buy it, then you might have to adjust your price in order for the order to be matched. Yeah, so it happens. And then people will be asking, then in that case, you should like straight away match all 10 million units, right? That is not possible. That's another hidden secret I want to tell you because you joined my session today. Okay, so for issuers, we actually have to hedge on warrants. Means that we have to buy and sell the shares for me to buy and sell the warrants. So in the case that you want to you want to take profit from your warrants, you want to sell your warrants to me, right? At the same time, I'm going to sell my mother share as well. This will actually cause the mother share price to move also. So it's not that if the mother share price is 150 cents, then I have to match all 10 million units. It's we cannot do that. It's not that we don't want, but we cannot do that because at the same time, when I buy a warrants, I have to sell all the shares. Um, a certain amount of shares, and we call it the hedging strategy. And then that will actually cause the share price to move as well. And subsequently, it could actually impact the warrant price too. Okay, so this is a hidden secret. Okay, I know it's not very hidden lah. It's not a very secret lah, but it's a hedging strategy by the trading team. I mean for the market makers as well. Yeah. So for you to know whether it's going to be liquid or not, is going to be matched fast or not so fast. That case, right? You have to buy and sell, then you will be able to see. But the very straightforward thing is that to look at the mother share. So if the mother share is very liquid, the volume is very high, people buying and selling, then you know that it's actually quite liquid lah. Yeah. So the warrant will market make in accordance to this, not too slow so long. Okay. So this is for JPG. Yeah. So if you have more questions, you want to ask me more secrets, feel free to do so. Because for Bursa Malaysia, all these webinars is actually for a knowledge sharing session. I'll be very honest with you, when there's this knowledge sharing session, right? It's actually from the perspective of an issuer and or slash market maker. So you have to make all these time worth. Okay, it's free also. You don't have to pay. Yes. Okay. So I think in this case, right? I think I want to pass the. I think I saw a few questions from the chat box. So we have to enter to Q&A session, and now I pass the floor back to Michelle. So make sure you put in the chat box. If not, later I'm not going to answer your question. Thank you. Hi, Michelle.
Okay.
Over to you.
Okay, thank you, Miss. Thank you, Miss Vanessa, for your wonderful sharing with us. We will now proceed to the Q&A session. If you have any question, please type them in the Q&A box, and our speaker will address them accordingly. So, Miss Vanessa, the first question here: what are HSI warrants and how do they move?
Okay. Actually, I got this from Priya very very early. Yep.
Yeah.
Just now. Thank you so much for 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 asking. Okay, I will just share with you on. Hope I don't look. Are we on my website, guys? Michelle, you saw my website?
No, Miss. I think you haven't shared it.
Okay, I share now. Okay, so what are HSI warrants? Normally, right, you see all these warrants. Okay, so warrants, this these warrants, normally I put my diary. Yeah. Okay. So in HSI warrants, it's called Hang Seng Index warrants. Yeah. So when we say Hang Seng Index warrants, right, it's like stock warrants also, but the underlying is actually the Hang Seng Index futures. So you actually have to go to the issuer's website. In the market, there are a few issuers issuing Hang Seng Index warrants like Macquarie. I'm not promoting Macquarie, I'm just sharing. And then another one, I mean not specifically to anyone, but then Maybank, Kenanga, they do all of them, they actually issued Hang Seng Index warrants as well. So how they move is that it's like warrants, like structure, they're all structured warrants, right? So it's just like stock warrants. It will actually change the price of warrants following the Hang Seng Index future. So instead of like just now, I keep talking about uh, Maybank, Tenaga, all these, right? This one, the underlying is index. So you have to go and look at the index. Yeah. So HSI, see cannot. This underlying chart. Oh, then you have to go down and then you'll be able to see all this in the market. If you are bullish, then you go for call. If you are not bullish, you are bearish, you go for put. Okay. But I think all issuers website are the same. If you are on Macquarie website, you have to go and look for Macquarie warrants so that you can only look at the only you can look at the live metrics. Yeah. So this is how they move lah. So this is the underlying bid. Underlying is the Hang Seng Index futures. This is the bid price, and then the offer price, and then this is the warrant bid price and warrant offer price. So instead of buying this at Hong Kong dollar, you can actually buy 3 cents worth of a Hang Seng call warrant. It's very cheap lah. Yeah. So I think I answered your question, Priya.
Okay, so for the second question, is that every month will issue new warrant?
Okay. So thank you for the question. We try to issue more warrants like every month, or maybe 2 tranches every month, but it depends. How do we actually choose what kind of warrants to issue? Is that we will replenish the old ones. Some are too out the money, some are too in the money, and some are expiring very soon. So we will actually issue according to that. So there's no fixed month that whether we will confirm issue or not. And then the number of number of warrants issued also different. So what you need to do is that uh, to follow RHB Investment Bank or some of other issuers to see whether they are going to issue new warrants. So normally on the day of list, okay, so there's actually two important dates. One is offering day and another one is called listing day. Okay, so offering date is actually the day before listing. The listing day is the day that you can finally trade. So for all of you who actually follow on, especially Bursa announcement, you'll be able to see that there are new warrants coming to the market tomorrow. So one day before, you'll be able to see what kind of warrants that we are issuing. And then the next day, you can get ready, check the price metric before market opens, and then you can start to strategize your trade. Yes.
Okay, for the next one, what does implied volatility indicate?
Okay, wow, this is a very, very cheap question. Very, very deep question. I mean, it's a good question to ask. What does implied volatility indicate? It actually shows that what are the what are the views of traders on this underlying? Do they think that this underlying is very volatile? Or they are going to be like, sideways or not very volatile? If you want me to compare, right, like tech stock, for example, Nation Gate, compare to Maybank. Okay, so you can actually compare. Then you will know, Maybank is actually not very volatile because it move not a lot lah, like a few percent. But for Nation Gate, example, 6%, 10% up or down. Yeah, so this is not whether they are bullish or bearish, but it's that the view on volatility. So in the case of why volatility implied vol is so important, right? It actually indicates whether okay, there's this thing very easy to understand is that if it's going to be very volatile, the price of this warrant will be relatively more expensive. And this is when we actually price the warrant, then we put some wall inside lah. We put a wall inside, and then we say, oh, this is going to be very volatile in order to protect ourselves, right? And to give a very standard price, standard value to this warrant, a fair value to this warrant, then we actually put in one number of volatility. But implied vol that we see on all these websites, right, it will change from time to time. Why? Because if you look at website like Macquarie website, or RHB website, you will see implied vol will change from sometimes 10%, sometimes 12%, sometimes like 15%. Because it will actually, because we don't know what is the selling vol, we cannot tell anyone. But then we can actually use the last traded price of that warrant, and we do a backward calculation. I mean, the website will do a backward calculation, and then you will actually see what is the implied volatility. In this case, if you're familiar with RHB warrant website, we actually let you compare all the implied vol of some warrants. I always like to use some sort of extra because less, right? Easier to compare. Put all, you can choose not to put all issuers lah. You simply choose lah. Then you can add from more filter, go to implied volatility. Then this is actually the implied vol for all these warrants based on the last traded price. If higher means more expensive, if it's more expensive, you'll notice that the warrant, even though it's very cheap, but then it's not going to be very expensive. Okay. They are also like the cheaper ones, like this 42. This is very cheap. It's very cheap. Okay, you see, it's about the same, 2 cents and 2 cents, but then because it has lower implied vol, the sensitivity is actually better than 12 ticks. 12 ticks you have to wait very long, but this is only 5 ticks, but the price is the same. So implied vol actually represents the pricing of this warrant. Yeah. So whether you cannot feel it lah. I mean, 2 cents is 2 cents. I take out from pocket, it's like 2,000 ringgit. But then cheap or expensive, right? It depends on whether it's sensitive or not. I think this is how I actually perceive it lah. Yeah. So normally cheap warrants are very low vol, very cheap, very good to trade. People always say like that, right? It's when it's very sensitive, like this, one ticks, and then the effective gearing is very high because it's very cheap, but then it moves very fast. Yeah. I would say if you can compare on implied vol, then you can actually tell it from the sensitivity and also the effective gearing. Okay, I hope I answered your question.
Okay.
Okay.
The next one. Do you look at the conversion rate ratio?
Conversion ratio. I look at, okay, you mean exercise ratio, right? Okay. So for exercise ratio, I normally don't look at it. because because it's very simple. When I know how to use life metrics, price metrics to compare, I don't even have to look at the exercise ratio. I mean, it's a bit extra for me to compare because what I need to do is that I just look at the warrant price and then the sensitivity. I know that okay, I'm going to get approximately how much from, for example, from 5 cents become 5.5 cents is about 10%. So I know it's about 10% already. But then it's maybe it cost me about 2-3 ticks of time. Yeah, so I know that already. But if I go and compare what exercise ratio, I want to sort according to the biggest to the lowest because the lowest will be more sensitive. But on the other hand, you will notice that maybe the bid price will be higher. Yeah. It's not that not important, it's very important. But then for me, if you want me to choose a warrant faster, I will just go directly to the price metrics and then look at the sensitivity. Yeah. But as I shared during my presentation, I mentioned that if the exercise ratio is high, it will be, if provided everything is the same lah, everything remain constant. But the exercise ratio, one is 8, another one is 4, then normally the 4 exercise ratio would be more sensitive. But on the other hand, the warrant price would be relatively slightly higher. The absolute price. Yeah. Okay, cool.
Okay. The next one. What does the break-even price and delta and at the metrics mean? Do I have to take that in account as a short-term trader?
Okay, thanks for the question, Dylan. Okay, Yes, come, let us look at the break-even price. Just choose this one now. Okay. Binasra CD. So this is an example. It's not asking you to buy. Okay. So he asked two questions. One is what is delta, and also the break-even price at expiry. Okay. So I go for the break-even price first lah. This is actually like what we call the premium. So normally when we look at premium, right, we thought that is the excess that we pay for this warrant. I mean, it's true, but you cannot count it directly like that. Okay, so premium means that if you're buying this warrant at this price, how many percent that your mother share has to move? So means that plus 18% lah. How many percent of Binasra mother share has to move in order for you to break even on the day of expiry, upon maturity? Yeah. So, but for you as a short-term trader, right, you don't really need to care about that. You are short-term, right? You don't actually hold this warrant until expiry. I mean, there's no point because you know that you go in short-term, it's like one, especially intraday lah. Time decay is not going to affect you. Expiry is not going to affect you that much because you're not going to trade anymore. So in this case, the break-even price at expiry is, I would say, is irrelevant for you. But a lot of people still look at it as premium because, okay, like in fact, premium is also definitely a bit of excess. But then if you are doing a short-term trade, I don't think it's a big, concern for you. But unless if you want to hold for a long time, long term, right? Then this will be you can actually look at it lah. So in this case, right, on May 26th, right, Binasra has to move to 2 ringgit and 36 cents for you to break even on this warrant if you never sell. Okay, so which means, but if today, right, you want to sell at 2 ringgit and 36 cents, well, Binasra is already, I don't know how much, maybe 7 cents, 8 cents, you have already made money then. So you will actually just liquidate and take profit instead of buy and hold. Okay, so I think break-even price I explained to you already. Another one would be delta. Delta, I think is very important if you are a trader, if you just focus on derivatives. You can actually sort of calculate how many shares that the market maker is going to buy from the market. Yeah, I mean, if you like buy 100,000 units, 1 million units Binasra CD, how much shares that the market maker has to buy it from the market? Then that is actually the delta. It's actually the changes in the warrants compared to the changes in the price of the mother share. But on the other hand, right, it's actually I would say on the other hand, it's not very important for you because as a short-term trader, what you need to do is that to focus everything, pay your attention on the price metrics and also the mother share price, and that is good enough for you. Because as I have spoken with some of the traders, they are also the proprietary traders, intraday traders. They do not actually look at so many things, including exercise ratio. They don't look at it. What they do is that they just look at the price metrics and the share price movement. Yeah. So let me. So did I answer your question, Dylan? Yeah. So maybe we can proceed with the next, or give me a grade.
Okay. For the next one, is the BQT and SQT for not so active warrants quoted by the same market maker?
It's the same market maker normally. So okay, so maybe I just sorry. Where's the screen? Cannot see. Okay, it's here. Okay, the buy quantity and selling quantity for not so active warrants by the same market maker. Okay, yes. So normally there's only one market maker, which is the issuer who issue this warrant, like Binasra, right? Then left, right normally is the same market maker. But maybe when the mother share is not so liquid, then you will notice the buying and selling quantity will be lesser, maybe 100,000, 50,000. So it actually depends. Okay, but sometimes you will see, normally why RHB normally quote 500,000 each side, but why suddenly this one 1 million, this one 500,000? In that case, there are someone else lah, but they're not market maker. They are maybe just some other investors who actually wants to sell at the price as well, so they will queue at the same price lah. Okay.
Okay, from the same person, some market maker don't give warrant metrics. What do you recommend trader to do? Calculate the value on our own using RHB calculator?
Some market maker they don't give warrant. I mean, warrant metrics is actually it's not a compulsory thing, but it actually just help investors to trade with more transparency and all. So how do I recommend you to do? You can actually generate your own Excel file. If you normally we use a Black-Scholes model as warrant pricing model lah. So if you can actually study on that. You can actually create a file for yourself on Excel. If you know, since you know what is exercise price, what is the exercise ratio, expiry date, what you don't know is the selling vol lah, the volatility that they actually they price for this warrant. But if you want to assume you can actually use implied vol, then you can almost get it. But then I mean it's a guidance for you to trade, yes. But since it's not a metrics from the market maker, then that is just an indicative thing for you to refer lah. So you cannot bring this and go to the market maker and say, hey, why you never match my warrant? It's already in the metrics, but I mean it's not lah. Yeah, but you can actually use any calculator online. Yeah, Google. You can actually try to look at it, or if you have time, you can actually develop yourself on Excel. Okay, cool.
Okay, for the next one, how time decay of a warrant impact its price as it approaches the expiration, and how we can leverage this in short-term strategies?
Okay, how a time decay of impact price? Okay, we compare we use warrant search and then we find something that is like so near to expiry. We have about 15 or 16 that is expiring soon on 26th March. So these warrants the time decay is like very fast, especially it's within a month, and then the next thing is that it's out the money or at the money, and then the time decay is very fast. So I look at slightly out the money lah, EcoShop CR. Sorry, my investors who actually invested in EcoShop CR because the price is very low. It went out the money. Okay, so 11% out the money. Okay, so how do we look at it? The theta means time decay. If you see this theta in absolute terms, right, minus 0.00006, this means that one day this warrant will decay by this value. Means that 0.006 cent lah. 0.06 cent one day. Okay, so one day you won't see anything, but 2 3 days or 4 days you will start looking at your warrants decaying. Means that the share price is still the same, assume, but then the warrant price came down already. Yeah, so this is what we call time decay, and we use theta lah to represent it. I mean the Greek is theta. In this case, how do you actually use it in your short-term strategy is that even though it's near to expiry, but intraday will not affect you because time decay will only applies for like overnight, right? A lot of people will still trade expiring warrants one. Let me show you. You know why? That is because when warrants is very close to expiry, the time there's time decay, right? The time value is getting lesser and lesser and lesser and lesser. So what is purely inside the warrant price left with the intrinsic value or slash some remaining time value lah. So in this case, you will be able to see the warrant is so cheap. Correct or not? So I look at this one. This is a good one to you see it's very hard to find example because normally we have already widened the spread. Okay lah, this one Binastra CA is a very good example. Okay, provided that assume this one is a very tight spread lah. People still want to buy because when there's very little time value, it's going to be very sensitive. Like this one is at 1 ticks or 2 ticks. But then the gearing is so good, it's at 10.5 times. So you can get something that is super sensitive and super good effective gearing, but it's expiring very soon. So this is very good for short-term trader lah, especially intraday. Imagine like this one 3 cents move in Binastra only. You are going to make money from here to here. Yeah, provided that okay, I assume this one is 8 cents, right? You make money from 8 cents to 8.5 cents in just 3 cents of movement. Yeah, so this is how you actually use it in your short-term strategy, trading expiring warrants. But I will still think that this one less than 30 days is it's too risky lah. It's too risky. In the case of it goes another way around, right? Then it will be very bad impact. Excuse me. Okay lah. I think April will still good to trade. Like you see 2 ticks and then this one gives you 7 times. It's actually quite good. DRB Highcom. Okay lah, this one is not, the moneyness is not that nice. This one is fine. AB and BC26. The share price is slightly in the money lah, compared to the warrant price, slightly in the money. But then the sensitivity is 3 ticks, but the effective gearing is like 10 times. So 6.5 cents. About 3 ticks, you make money already. 3 to 4 ticks, then you make money from ABNB C26. But this is not a buy call. This is just an example. All right, so I hope I answered your question.
Okay, the next one, how interest rates can impact warrant pricing, particularly for long-term warrant?
For interest rate is more on like the cost lah, the cost of how we actually price this warrant. So longer term warrant normally will cost, if you look at it, the time value also more, right? Because it's longer, so it will be relatively higher in absolute price. Yeah. So I would say this interest rate is if you actually look at the Black-Scholes model, right? Interest rate will actually play a very important role in it. Yeah. So higher interest rate, the warrant pricing will be also higher lah, because cost, right? Yep.
Okay, the next question, assuming a SW expires with in the money, the holder of this warrant will receive money equivalent to the percentage of ITM after the expiry date. Is it correct?
Okay. This one, it requires a calculation. Okay. In the money, you're right. Only in the money warrants will get cash settlement. Okay. So the percentage of in the money, I need to do a calculation like this. Like, hey, normally I will just go for absolute price lah. So I look for one in the money warrant here, and then I'll show you the calculation. So we use Nasdaq Speedmart C15. So there's one hidden feature also. I don't know why the design is like this, like very cute one. It's very cute one. You click on this thing, right? Then it will come out a hidden calculator. This is actually a cash settlement calculator. Okay, so you have to calculate the 5 days closing average. You have an expectation because you don't know what is the closing average of that warrant. You don't know what is the last price of the closing, what is the last day of closing price of this warrant, of this underlying. So you just assume say, okay lah, I think 5 days, the average will be 3.50 ringgit. So now you have 100,000 on hand, 100,000. Now you have to use this 3.5, which is the settlement price, the closing average price, minus the exercise price. So in the money already. But then the percentage is not like, percentage is correct lah in this case, but then the ratio, you have to divide by 2.5. So this is per unit of warrant. And then you have 100,000 on your hand. So cash settlement, you'll be able to get back 32,000. Indicative. This is before all the fees and all. So 30,000 will be paid to you. But this is not profit. Okay, this is the money that you get back. Imagine if you invest at 20,000, then you make about 12,000 ringgit of profit. But if last time you bought this warrant and then the cost is 35,000, but then end up you only get 32,000, so means that you're at loss of 3,000. Yeah, so cash settlement doesn't mean it's a profit lah. It still depends on what is the cost that you enter. Okay, but I think I haven't answered all your questions. Percentage, I think is correct lah. So if it's like 5% in the money, the 5% is 50 ringgit, then you get back 50 ringgit, but you have to divide by excess ratio law. Yeah. Okay.
Okay. For the next.
Sorry, I want to add on the
Yeah, sure.
explanation to Beng Lim, Yok Beng Lim. Okay. In the money is in the money. Yes, that's on the last day maybe when you look at the share price compared to the SIS price. But settlement price, you have to take 5 days of closing average. And only RHB, I'm not sure whether only or like different issue. Okay, I would say this: different issuers have different closing price slash VWAP. So some issuers they use VWAP, some will use closing price. So for RHB, we actually use the closing price of that shares. So some other issuer they will actually use the VWAP of that underlying. So you have to check on the term sheet and all lah. Yeah.
Okay. The next question. What is LA? She saw it in on the capital A.
I think this question is not related to warrant. I think this is one of the securities that is like issued by the company lah. So Capital A actually issued something called LA. It's not basically it's something convertible securities. Yeah. But this is not warrant. So normally warrant will be CS, CBCC, C1, C2, C3, or CW. If put warrant is H and then or PW. Yeah, for company warrants is W. So LA is none of them lah. Maybe you can actually check with your broker, then maybe they can give you a better explanation. So sorry for that.
Okay. For the next question. If a warrant has high traded volume but low open interest, what could this indicate about market sentiment and liquidity risk?
If the warrant has high traded volume but low open interest, means that people don't like that warrant, but you saw the warrant is being highly traded. Am I right? Okay, what this indicate about market sentiment and liquidity risk? Okay, so in this case, right, sometimes we saw very high traded volume in certain warrants. So first thing, we need to know whether it's expiring soon or not. Because sometimes, like just like I mentioned about low inventory or sold out warrants, right? People are keeping all the warrants. Maybe they keep until expiring soon, so they have to sell it back to the issuer. Or maybe the warrant is already long time out of the money, and then suddenly or finally got half cent, the market maker is buying back at half cent, and then they will just sell back all the warrants. Or maybe they take profit on that warrant. Then you actually see a very high traded volume. Even though you look at the mother share is not liquid. No people is buying the mother share, right? But then a lot of people are selling back the warrants, and then you'll be able to see very high traded volume. Okay. Yes. And the liquid market sentiment, okay, that's one thing. The second thing is that they are also traders or maybe investors who's trading the warrant, because these we normally in the share market we know that people are buying and selling, right? So if people buy and sell, then you actually be able to see very high trader volume. Sometimes they are not bullish or they are not bearish, but they are trying to arbitrage on this warrant. So maybe they can notice that the mother share is not very liquid. The liquidity in the mother share is lack of a bit, but then they actually will try to buy and sell the warrants and try to maybe make a one tick of it lah. Yeah. So liquidity risk is actually very high because if if for us lah, market makers, if we are like selling warrants and buying warrants, right? But we are unable to buy and sell the mother share to H. In this case, it's actually not benefiting us. It's not very good for us because we are unable to buy and sell. So in this case, we might not be able to hedge the position fully. With this, the market maker, like us, we actually will, in this case, we will either widen the spread of the warrant because we know that the liquidity of mother share is, off a bit, right? Less a bit. So we will actually widen the spread of warrant so that the warrant, so that the investors are refraining to buy that warrants for a while. So once the liquidity is back, then we will tighten the spread. And secondly, you will actually notice the queuing quantity each side is lesser. Maybe from 1 million became 100,000 because we have to follow the mother share liquidity. And also the review speed will be slightly lesser lah. Yeah. But this will actually impact our investors. If they want to buy, they cannot buy it fast. Yeah. So still have to, as for all these derivatives, I think it's still very important for us to look at the liquidity of the underlying shares. Okay, so I hope I answered your question, Annie. Yep.
Okay. The next one, just a short question. Does RHB conduct courses for warrant?
Yes, yes, yes. Okay, I'm not sure whether you have joined you have explored our Warren website or not. So if you go, then you can go connect, sign me up. This one is for you to, if you want to get newsletter, you can just put your email address, then I will send. We will normally inform our clients, inform our audience that we are going to have events and all. If you go workshop here, right, I will update lah. We will update. Like if you go seminar, then you actually see all these seminar and webinar that we have conducted and upcoming to be conducting. But if you really, really want to have a workshop, a smaller workshop, definitely drop your email to me, contact us, then you can call me at this number 0392002185. Not only asking for workshops lah. If you have if you encounter any problems, any issues in trading RHB issued warrants, right? Then this is the number that you can call to seek help. And then you can also send us an email lah, rhbwarrant@rhbgroup.com. Okay? Yep.
Okay. How long does market maker take time to pay out? It is not T+2.
Okay. If you are selling your warrants in the market, then it's instant lah. That one we know. Okay, payout. I think this means that after expiry of the warrants, how many days? Normally, it will take 7 market days. It's actually on the warrants announcement, the expiry announcement that we made on Bursa Malaysia. So it will actually take 7 market days to be paid to customer if there's any cash settlement.
Okay. The next question. How does delta affect a warrant's sensitivity to the underlying stock price movement? How can delta be used to construct a hedge position?
Okay, so when the delta is higher, right, it will actually follow the mother share more. But if it's a lower one, then it's like not so sensitive, I would say. But I think this one will be a bit more advanced for me to answer here. Okay, so I think if you actually trade options, then I think delta is very important for you when there's no market maker, right? As options, there's no market maker, but for structured warrants, there are the existence of market maker. So for you to actually construct a position, I would say using the price metrics will be easier for you. But if you want to know more about how delta is going to affect your warrants, feel free to call me at this number or maybe send me an email, then send us an email so that I can actually take this offline. Okay, Annie?
Okay, for the last question, what are the reasons when market maker adjust the warrant price during the trading period?
Okay. It's actually possible. Um, I mean, it happens. During the trading period, the price will be adjusted normally through volatility adjustment. It's possible when the share is very, very volatile. Normally, we'll widen spread first lah. So I think this is what you meant by adjusting the warrant price. Yeah, during the trading. when either the sector is in high volatility, is highly volatile on that day, or that specific underlying is very volatile. Very volatile means that the price move up and down in big movement. So in this case, there are some adjustment to be done. Yeah, so that's why it's actually good for you to look at the price metrics. That's one thing. But second thing for you to know is that price metrics is not a promise. It's normally indicative. So if you look at all these price metrics, it's actually just a guidance, a reference for you, where it is not an obligation. Yeah, so it's not an obligation from the market maker, but instead it's actually just a reference for you to trade. Yeah, so it's all indicative. So it's good to always have a reference. Okay, I hope I answered your question. Thank you.
Okay, let me share my screen.
Um, sure, please. Oh, I stop share first. Sorry.
Yeah. Okay. So thank you everyone for taking the time to attend today's webinar, and we will also like to sincerely thank Miss Vanessa Tong for taking the time to answer all the questions and for generously sharing her knowledge and insights with us. Um, so yeah, so thank you, Miss.
No problem, Michelle. Okay, guys, if you have more question, right, feel free to send me an email or maybe call the hotline so that I can actually answer a question, because I think you all have more questions lah that is that's actually from this session. So yeah, any questions are welcome. Okay, thank you so much for spending time with us today. Thank you very much. Bye bye.